Hello and welcome. You're watching Business Today. I am Sakshi Batra, and this is a show where we will talk everything about the mega LIC IPO, which is already open for subscription. I am with me is Tina Jain Kaushal, and she is the senior editor at Business Today magazine, and she also writes for the website. And she's written an extremely interesting article about LIC IPO, where she's warning investors about some of the risks. She's also a chief financial planner as well, so certified financial planner as well. Tina, welcome to Business Today. So let's discuss about the mega IPO. Of course, the policyholders are gung ho. We're already getting some 2-3 hours down the line. The subscription figures are coming in. Policyholders portion is already subscribed fully, and there's a pickup happening in the retail portion as well as of now. But you're going to be telling us some of the worrying points, perhaps, and the risk factors that all the investors must be aware of. Of course, all of us are hearing that there is a massive FOMO going on, a fear of missing out on the LIC IPO, because there's so much connect personally, which everybody has with LIC IPO. And I can completely understand if you're not able to do it, and if you really want to do it and you don't know whether to decide to go for it, subscribe it or not. There are these 5 factors that you should definitely keep in your mind before going ahead and applying for that IPO too. So what is the risk factor number 1, Tina, that you pointed out?
So, Sakshi, I would like to say first that LIC is the largest insurance company of India and also the oldest. It was formed in 1956 when 245 companies were nationalized at that point of time. So it's a big company. Yeah. That's one thing is there, and it has been fairly priced at 1.1 of embedded value. But if we talk about some of the risk factors, there are a couple of things when I compare it with private life insurers. First of all, it is that it has a very large share of single premium policies.
Okay.
In life insurance, we have 2 types of policies, regular and single. Regular policies are those which are long term and where premium is paid over the period of 5-10 years, whatever your policy tenure is. But in case of LIC, the negative is their large sum of premium is coming from single premium policy. In case of insurance companies, those companies are valued more where regular premium policies share is more than single premium. So that's where private companies are scoring over LIC. That's one of the factors I will say.
So I think the factor number 1 is the higher share of the single premium policies that LIC has vis-a-vis all the private companies that are listed, that perhaps have more varieties over there, and multiple paying premiums as well of the policy, which is the risk factor number 2.
So the risk factor number 2 is a share of participating policies. Okay. Again, in case of shareholders and investors, companies with higher non-participating policies are valued more. In case of LIC, participating policies share is as high as 90% of total premium. And if I talk about individual, it's around 60 to 65. So clearly, it is a high stake, and that's one of the problem, because term insurance policies are considered high margin policies where profits are more for insurance companies, and it's good for policyholders also. So this is where insurance company is saying that they are focusing. In the press conference also I went, so the chairman has said in future they will be focusing in this area.
Okay, but right now, currently, this is a risk factor that all the investors must be aware of as well, the higher share of participating policies, premium policies as well. The other risk factor, which is that one?
So in case of insurance company, we look at the ratio which is called value of new business ratio.
Okay.
So in case it is equivalent to your profit ratio in other companies.
Okay.
So if I look at the VNB margin of LIC, it is around 9%. So it means that LIC, every premium of 100%, LIC will have a profit of rupees 9. Let's look at this way. Similarly, in case of HDFC Life and ICICI Life and SBI Life, which are other listed players in the private space, they have the VNB margin of around 21 to 27%. So clearly, they have the better profit margins when I compare it with LIC. Because when we look at companies, we first look at what is the profit margin. So in that case, private insurers are scoring over LIC.
Okay, that's also an important factor. 3 risk factors that you've already come to know so far: higher share of single premium policies, the participating policies, and now the VNB margins as well. Which are the other 2 risk factors? Let's talk about the 4th one first.
So the 4th one is declining market share. Though the LIC is a very big player in the market, it is the largest player. But if I see over the years, LIC market share has fallen. If I talk about 2019, its market share was around 66%. Now it has come down to 61%. So we can see the aggressive side of private players are somewhere eating the pie of Life Insurance Corporation of India. So that's one of the factors, the fourth factor, which is negative for the company.
Okay, so 4 factors down already. So high share of single premium prices, high share of participating policies, VNB margins over which the private insurers are scoring more over LIC, and the low and the market share which is now getting slightly eroded and going to the private players as well. The last factor, which one would that be?
So when we look at companies, we look at their growth rate. So if I compare LIC growth rate with private players, LIC is growing at a rate of 9%, which is a good rate. But if I compare it with private players, they are growing at 18%. So there, my value of money might be more even if I'm a shareholder and investor. So that's one of the point, because LIC is a large player. It is not going through the growing stage. It has already matured in the market, while other players are very small in the market and they are going through the growing stage. So that's an advantage as well as disadvantage for the company.
Absolutely. So you have to definitely balance out all of these factors before deciding whether it is prudent for you to really take that step forward and apply for LIC IPO. Because even though it's a behemoth, even though it's a biggest market share is with LIC as of now in the insurance basket, there are a few these risk factors that you should definitely be aware of in case you want to take that plunge right now. Thanks a lot, Tina, for sharing with us all these 5 risk factors. And I'm sure all the investors will now be more they will have more value points to add on to whether they want to really add on to this LIC IPO to their portfolio or not. It'll help you decide that for sure. Thanks a lot for tuning in for now.
If you like the video, do like, comment, share and subscribe.